Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. Indices trade flat amid a choppy session after a strong open. Midcaps lag. Banks, auto and energy outperform. Metals and FMCG drag.
Fusion Microfinance shares slide after a muted market debut. The shares list at a slight discount to the issue price of 368 rupees. The management tells CNBC-TV18 that diversification is the big difference that the microfinance lender gets on board.
Rail PSUs, Railtel, RVNL, Ircon scale to their 52-week highs on the back of strong Q2 earnings and order inflows. The stocks gain up to 10% intraday.
Apollo Tyres revs up on beating expectations on sales and margins, while Balakrishna Industries ticks up as volume surprise and margin expectations improve as input costs recede.
IOL Chemicals slides on weakness in the second quarter, while positive management commentary gives Greaves Cotton a boost. IOL Chemicals margins fall as much as 400 basis points in Q2. The management of Greaves Cotton, meanwhile, tells CNBC-TV18 the company expects margins to pick up from here on.
Okay, all right. Those are all the stocks in focus and the market moves as well. For our own markets, absolutely flat. It has been choppy for last 2 days. And right now, Nifty is sitting with gains of 6 odd points, but not major moves that we've seen. At 12 o'clock, though, there was a major recovery from the lows. It was led by the Bank Nifty, and that index is up around 110 points. But Reema, largely quiet, so to say. It's a quiet day yet again, but we'll have to see whether we continue that or not, because after Friday's stellar rally, we have taken a pause.
You know, the range today on the Nifty is just about 95 points, which means the overall range is 0.5% of the Nifty.
Right.
That's how quiet things have gone. And I'm just wondering, like, at least, you know, for the last couple of days, you did have moves, right? Like on Friday, as you pointed out. But the individual action, action was in individual stocks, thanks to earnings.
Yes.
But now earnings has also come to an end. So you're not even going to have those big 10% up, 10% down moves on the back of news flow. There is no big global or domestic trigger that's lined up for this week. But anyway, let's get to our Midcap Mover segment. Vivek joins us to take us through the midcaps that are moving around in trade. Vivek.
Well, thank you. You know, as you mentioned a little earlier, most of the railway stocks continue to remain in focus, and the entire theme, the entire basket is doing very well. Today, again, moving up on strong volumes. So Railtel, RVNL, as well as Ircon, all of them moving up today as well, hitting a fresh 52-week high. Select infra stocks also on the back of strong order flows in the quarter gone by. They're also doing quite well. IRB Infra has been a strong mover in the last couple of months. And NCC on the back of slight upward revision as far as its margins were concerned, again, moving up quite strongly. Some auto ancillaries also in focus. Gabriel India today at a fresh 52-week high. And Exide after a muted set of earnings. However, on the back of the plant announcement that the company has made, today is moving higher. Some stocks that have hit the screen on the back of very strong volumes. Vesuvius India on the back of strong earnings. Akshar Chem today after almost 7 sessions of a decline today, regaining momentum in a very strong way. And Hindustan Foods, this particular stock, is up almost 38% in the last 7 trading sessions. On the other hand, when you're looking at some of the losers, Aster DM continues its slide. TCX also. Brigade Enterprises today is seeing a very sharp downtick on very strong volumes. VRL today saw a very sharp dip, has recovered slightly from the day's low, and Campus Activewear on the back of multiple small block deals today is trading sharply lower in the session.
All right, okay. Campus Activewear continues to decline down around 35-36% in the last couple of trading sessions. Thank you, Vivek, for all those stocks that are in focus. So with that, we move on and talk to the first company on Midcap Radar. Somani Ceramics posted a subdued second quarter, largely weighed down by weakness in demand. The company saw higher costs, hurting margin as well. Note that quarter 2 is a seasonally weak quarter for building material companies generally. To discuss this and the outlook going forward, we are now joined by Abhishek Somani, who's the MD and CEO at the company. Abhishek, good afternoon. Thanks a lot for joining us. Well, quarter 2 has been a weak quarter across the industry, and that is something you have mentioned in the press release as well. How are things right now? Because there were a couple of things which were hurting the industry. There was lower demand, raw material costs, especially gas prices were through the roof. Will the second half see some improvement, or will it be a while before things come back to normalized levels?
Yeah, you're right. We had a subdued quarter, and second half generally is better. A good year, bad year, generally second half is always better. But coming into second half, the first month has been muted, which was expected because October is generally just before Diwali. It's generally a muted month for ceramic players because nobody wants their homes dirty. This year was exceptional, where we had all the holidays together, Dussehra, Chhath Puja, Diwali, all of them happened in 1 month. So I think November started off better. The other salient point, which is a green shoot, is that the gas prices have come off. They've started stabilizing in the global market and also in India. As far as we're concerned, we moved about, it's work in progress. By about November end, about 60% of our production would have moved to LPG, which is considerably cheaper than natural gas. So from that point of view, hopefully margins should start looking better post November and also early into quarter 4. So the raw material prices seem to be under check going forward.
So you're saying you moved from natural gas to LPG or propane? I just want to confirm that.
A couple of plants are on propane and the rest of them are on LPG.
Okay, so how much cheaper is it versus natural gas for you right now? And if yes, it is something that will keep raw material prices under check, what kind of margin improvement will you see in the second half?
So ballpark figure, about 64 rupees a standard cubic meter is the price of natural gas. Again, it varies from location to location, but I've given you a basket. And the price blended for LPG adjusted to the calorific value is about 52, 53. So it's about a 10 to 11 rupee per standard cubic meter difference.
Okay.
So that would definitely look better on margins. I can't give you any margin guidelines because there are variables of the other 40% of gas. We don't know how that will move. So I do believe that the volumes would start picking up and margins will also look better because at least 60% of the gas is under check.
Abhishek, afternoon. Rima here. So you expect volumes to pick up in the second half, as traditionally they do, though October was a bit subdued. Could you help us with some numbers? What could be the volume growth for the full year? And last year, your volumes were about 57.9 roughly. What was the number in October and what should we expect for the full year?
I don't remember the October number, but I think we were about 10% down than what we would have envisaged early in October. But the approximately 57.5, 58 million square meters was the sales last year. We should be anywhere between 66 and 68 million square meters this year. So good gains as far as that is concerned from a volume perspective going forward.
Oh yes, that is because it will be an increase versus last year. So I just want to understand, when demand was not so good in the first half, you're expecting a substantial pickup in the second half. That means for you to reach that kind of volumes. And I had been speaking to Morbi Association as well, and they said even the export demand is not too much. For you, how do you have a substantial exposure to exports? Just want to understand. There is no exposure?
No, there is approximately 4%, 3 to 4% of our revenue is exported. But I think Morbi is going to see a lot of uptake in exports going forward from November till probably the whole of next year. I have 3 reasons to say that. Number one, freight rates have come off very substantially from India to Europe. Secondly, there's been an anti-dumping duty levied on Turkish companies into Europe. They were the large suppliers for Europe once the gas prices started going up. And the third reason is the gas prices have gone up so much in Europe that we definitely have become the alternate source for the European manufacturers to pick up material in their OEM names and also in for their distributors there. So all of these 3 reasons, you will see a large uptake of exports. And we're fairly sure that the last year exports was 12,500 crore rupees for this industry. And we are looking at anywhere between 17 and 18,000 crore rupees this year for export. So very big upsurge in export.
Interesting. Just getting back to the point about margins improving from here on, what's the outlook on the margins? Any number that you have in mind? And also on price hikes, I believe you've taken about 15% of hikes in the last 1 year. Now that commodity inflation is coming down, gas prices have significantly cooled from the high levels. Would you consider lowering your prices to boost volumes and demand?
No, the last price increase we took was in June, July, and since then we haven't been able to take a price increase. Ever since then, the prices have gone up of gas very substantially. So we are still not at that mark. Therefore, we're still absorbing cost to that extent. So there is no question of lowering the prices. If the gas prices remain where it is now or even go down by another 5-7 rupees per standard cubic meter, I do believe that the prices would remain constant. If there is any increase, obviously, then we will have to look at it differently. But I doubt there would be an increase going forward.
All right.
And margin? Any number on the margins, Abhishek?
No, like I said, Rima, it's impossible for me to give you a margin because about 50-60% of my gas is at LPG and the rest of it is still exposed on the crude and also on spot. And we really don't know where that will go. Coupled with that, even the rupee dollar has become so volatile. It's currently range bound, but we've seen it going up to 84. But you never know what happens there. So I think it's largely dependent on what happens on the global scenario with the war. That could really make a huge difference between where we are now on rupee dollar and also on the gas prices.
Okay, too many moving parts. Take your point, Abhishek. Gas prices, crude prices, they have been quite volatile in the last couple of months. Thank you, though, for joining us and telling us what's happening in the industry and for your company as well. That's the word coming in from Somani Ceramics. Things will look better in the second half, they say. Will do volumes better than FY22. And, of course, an interesting data point that European exports to Europe are increasing because of the way gas prices have shot through the roof in that particular market. The stock is spiked from the lows, is just flat right now. With that, we'll slip into a break now. Up next, we'll connect with Abhishek Agrawal, who's the Executive Director, Godavari Power and Ispat, to talk about their Q2 numbers. Stay tuned.
Welcome back. Godavari Power and Ispat has delivered a weak second quarter. There has been a sharp drop in the pellet realization, and that's resulted in the EBITDA for the company declining by close to about 50%. To discuss this and more, we're joined by Abhishek Agrawal, the Executive Director of Godavari Power and Ispat. Afternoon, and thanks so much for joining in. This is Rima here. I think in Q2, the quarter gone by, your pellet realization was about 8,200. Rupees per ton. Could you give us an update on what the realization currently stands at, and do you have any indication of what the outlook could be?
Hi, very good afternoon, Rima. Yeah, as you said, in the last quarter, the realization was about 8,200. For the 6-month average, it's about 9,150. And currently, the prices stand at about 8,200 levels.
8,200 is what the current levels are, you said.
Right.
So they are at par with what the Q2 period saw in terms of pellet pricing.
Yes, exactly.
And what is the outlook?
The quarterly levels, yes,
okay, what is the outlook going forward? You expect any improvement in these prices, or will they continue to stay at current levels? And if yes, what's driving the pricing right now for pellet?
See, I don't see much upside from here on because the monsoon is over. So the production of iron ore lumps from NMDC and other mines in India will go up. So that will create pressure on the pellet. But the advantage Godavari has is of the high-grade pellets, for which we are able to fetch at least 1,000 rupees premium compared to our peers. So that will keep us, driving going forward. And I expect the prices to be the same levels in this quarter.
Okay. I think the FY23 guidance shared by you is iron ore mining at 2.7 to 2.9 million tons and iron ore pellet volumes of 2.6 million tons. Are you on track to achieve it, and what will help you? What should we expect in the second half which will drive these numbers for you?
We are very much on track. 6 weeks back, we got an announcement of ECA for pellet from 2.4 to 2.7 million tons. So we have revised the guidelines from 2.4 to 2.6 million tons of pellet, and currently we are on track to achieve that. On the mining side, as the guidance given at start of the year, we are very much on track to achieve that.
Okay, so 2.4 million tons in terms of volumes you will do. You had reduced it. So there are no further pressures that you're expecting in the second half for the volume number. Considering what all you told us in terms of volumes and the kind of realization staying stable, what will the margin picture look like? You had told us 20 to 25% expected. First quarter was really strong. Q2 saw a sharp decline in margins. Do you stick to this guidance?
Yeah, we are hopeful with the current market scenario. We are hopeful we should be able to achieve a margin of about 20% going forward.
Of a 25% is not something on the upper side. That is not something that you'll be able to achieve.
It's very difficult to predict, because the market is so volatile right now. Every day prices are going up and down. But on a practical numbers, I would say 18 to 20% is a practical figure.
After the 45% export duty, how has your sales mix changed?
So see, of course, export has been totally zero after the duty was imposed, and currently our entire sale is domestic only.
Okay.
All right. So is now demand, you have spoken about demand going up, but post monsoons, what kind of demand revival have you seen, and do you expect it to continue? Because generally the idea is demand is much better than pre-COVID levels across sectors. Is that something that is working out for you as well?
See, yeah, I think November to April is the peak season for consumption in India because of the weather. So I foresee the demand should go up. And the advantage which is playing in our favor is the coking coal prices are still quite high, because of which our high-grade pellets, you are able to fetch a good premium in the domestic market.
You acquired AFAL, a promoter entity, for about 130 crore in June earlier this year. Is this entity profitable? Who owns the balance 22%? Is there a chance that you would look to buy it at a later stage?
Yes, going forward, we will look to acquire the remaining stake. The entity is profitable. If you see the numbers of Q1, the balance sheet was profitable. In Q2, the market turned upside down. The export demand was subdued. Internationally, the prices crashed. So that's why probably Q2 numbers are not reflecting what we supposed to achieve. But going forward, when the market stabilizes, we are hopeful we'll come to again positive.
Okay, so that 22% that you're planning to buy, what will the valuations be there? You must have put in some calculations in there. So what kind of money are you planning to pay for that? And that 500 crore rupees, that cash that you have in your books, is it something you'll be using for that?
See, we are right now generating enough cash on monthly or quarterly basis. And as we said earlier also, any expansion will happen under Godawari's umbrella will be funded by internal accruals. So all the cash reserve we are doing right now will be utilized for any kind of expansion as well as.
Okay. Abhishek, looks like we have you on a very scratchy line. We'll try to connect with you again because we don't seem to be able to hear you right now. But that is the commentary so far from Godawari Power and Ispat. They expect pellet realizations to remain stable at that 80 to 100 rupees per ton mark, and they're sticking to their volume guidance. The stock, though, after this weak performance, because margins have fallen substantially in the quarter gone by, is down 1.4% as we speak. For now, we'll do one thing. We'll slip into a break and we'll put focus on Syrma SGS Tech on the other side. Stay tuned.
Welcome back. Syrma SGS Technology is surging in trade after reporting their Q2 numbers. Vahishta joins in with the details. Vahishta.
Hi Reema, thanks for that. Well, Syrma SGS Technologies, which is engaged in electronics manufacturing services, reported their numbers post-market yesterday, and excellent set of numbers coming in. The revenues have doubled, EBITDA up 135%, margins are in double digits now at 10.1%. Even for the first half of the ongoing financial year, the numbers look very strong. Revenue up 147%, bottom line has come in at 46 crores, which means a growth of 130% on year-on-year basis. The company has said that the Indian electronic systems development and maintenance market, which is ESDM market, is expected to grow 40% annually, and the company expects to grow in line with the industry growth rates. Now, though the global recession, which is led by the developed markets, could pose some short-term headwinds on the exports, but the company continues to remain confident on the overall business prospects. Our interaction with the management on the day of listing, which is in the end of August, said that out of the 840 crores that the company is planning had raised from the IPO, they plan to utilize 500 crores for plant expansion, and the company is currently at 75% capacity utilization. FY23 revenue target is at 1700 crores. Margins are expected at 11 to 12%. Going by the current run rate, we expect the target to be met by the end of the ongoing financial year. Now, the street, though, is optimistic on a good set of numbers that came in for Q2 of FY23, but when we look at the performance of the stock from the day of listing till date, the stock is in red and down by about 7 to 8%.
Okay, Vaishya, thank you very much for that. But compared to its issue price, which is 220, the stock is still higher by close to about 32%. Numbers are strong. There is a conference call which is scheduled at 2 p.m. today. So after that, we will have some greater clarity. Just a few stocks. So Fusion MFI, the new kid on the block, had a weak debut, but since then the stock has sold off even more. So right now it's down close to about 13%. Nykaa, big volume seen on that. The stock has tanked nearly 9%. Campus Active, this stock has seen consistent selling ever since it came out with its numbers. The recent high on Campus Active was close to about 600 rupees. 630, 640 thereabout, and from those levels it's fallen by more than about 200 rupees. Sharp fall in Campus Activewear today as well. With that, we are out of time on Midcap Radar Mutual Fund Corner when we return.